Uh, Let me first, I think, congratulate you. I think you were telling me earlier that your fund, as against other funds of similar kinds in the market, has weathered this storm quite well. And that may be because it's a long-short fund. But your prognosis is not very positive from here in terms of what lies ahead for markets, is it?
Yes, Prashant, thank you so much. Yes, I think being a long-short fund, we've been able to protect our downside to this market. So since Feb, actually, we are down 1+% when the market is down over 35%. And, that is sort of a dharma for the long-short equity fund. But yes, I think, we are in unprecedented times and uncharted territory, because this is not really a conventional business cycle downturn. Nobody really knows how this script will evolve because it has no precedence. Of course, we were, as far as India is concerned, already in a slowdown. And if you are going to lock down business activity for, let's say, a month or so, well, to put it in context, China took 6 weeks to clamp down its business activity and then was able to resolve part of it. Given that we are a democracy, is it possible that we'll take a little longer than that? Well, likely. And that may have implications for cash flows for individuals, corporates, and to some extent even governments. And we'll have to see how we navigate that path. There's an expression in the equity market: give me bad news any day, but don't give me uncertainty, because we don't know how to price uncertainty. So the problem for the markets at this moment is that we are not able to quantify the downside that can happen because of the longevity or the durability and the damage it can do, to economic factors. And that's really the uncertainty that we are, coping with.
Sure. I mean, do you have a projection in mind, Rajesh? I mean, how much, is there any way to do it from here? You can look at historical guides. I think that's what people are doing. And that's why I think many are already writing off the bounce we saw overnight in the US markets and saying, well, we've seen this before. The biggest bounces always happen in the severest of bear markets. And then, the market tends to make lower lows. But does it necessarily have to follow that path? Because, I mean, if you begin with the premise that this is like nothing else we've seen, why does the script need to be the same?
No, I agree with you, and I concur with, that fact. But to put it in context, this has been the fastest decline, the equity markets, fastest 30% decline that the markets have seen ever. And the fact that at this moment you've had monetary stimulus of an unprecedented kind from the US and a fiscal stimulus, which is also of a large magnitude. And the fact that a lot of smart money in America is telling you that valuations have come to a fairly attractive level. All those ingredients are good to get a sort of a short-term bounce in the global markets, and India probably could also follow. So, that definitely is possible. Also, even if you look at the Indian context, the market valuations are pretty attractive. Our market cap to GDP is about 50%, which is a fairly attractive level. Even the price to book at this moment is about 1.7 times, which is probably as low as what we saw in March 2009 during the great financial crisis. So given that Indian corporates over 30 years and 40 years have delivered an ROE of 15, 17%, that price to book of 1.6, 1.7 times is reasonably attractive. Having said that, like I said, the challenges are, if we are in a bear market is defined as any market that declines 20% plus, there is a price-wise correction that has taken place. Can there be also a time-wise correction that will take place? And a lot of events have yet to unfold in terms of how are we able to navigate this crisis. And like I pointed out, we are a little still unsure as to what is the depth and duration of this problem that we are facing with. Because the longer it takes, the more damage it does to cash flows, of businesses. Now, imagine if you're a business, running a hotel, for instance, your revenues could be down 80 or 90%, whereas your fixed costs remain the same. And because you have to pay salaries, etc. So that brings in severe mismatches in your cash flow. So I think can it do damage to ratings of your companies, etc.? It certainly can. Of course, there will be forbearance from the Reserve Bank, and banks will be a little more benign. But that is the uncertainty that we are unable to quantify as we move forward, and that's really the challenge that we are grappling and hesitant to call it a bottom.
Sure. No. I have a final question, because everyone's expecting this RBI forbearance to come through. No one really knows what is the RBI's plan, right? So far, they have announced quite a bit. There's been liquidity infusion in the bond market as well. But realistically, from a market standpoint, what would you expect as the key tools from the RBI, in order to sort of solve this mess?
Yeah, I think, we are probably underestimating the magnitude of the, government fiscal and monetary support that this could need. I don't think these will be baby steps. This will have to be a bazooka that will have to be unveiled by the government on the fiscal side, as well as the monetary side. And basically, of course, what you want to do is make sure that the vulnerable sections which have, depend on monthly or daily wages are addressed. You want to make sure that the cash flows and the liquidity of companies is addressed, and that we can get back to a healthy economic activity environment quite fast. So I wouldn't even go there at this moment, but let's see how this evolves, and let's see the depth of that the downturn that we can see, and before we start to kind of think about the kind of measures that we would need to stem this and turn this around.
Rajesh, extraordinary times, so let me ask you to do something out of the turn. Opportunistically, leave us with some trades.
Well, I think, as these things settle down, I would believe that the telecommunication business, clearly for the need for bandwidth, and maybe we change our lifestyles to work at home, etc., the need for bandwidth definitely will be there. As you move forward, I also see that there will be a greater demand for health insurance, for sure. There will be demand for general insurance from businesses, because of business continuity could be a risk that most corporates would want to limit. You could also see good demand for term insurance as you move forward. So I definitely see some of these changes impacting the buying habits of people as you move forward. That's on the positive side, of course.